Bloomberg Audio Studios. Podcasts, radio, news.
One of the important elements of the budget for us is how this increase in the cost of employment then plays through. This is really possibly the most important part of it, I would say.
Andrew Bailey, the Bank of England governor there, telling MPs yesterday he doesn't yet know how the UK's budget is going to shift inflation here, after price rises have sunk incumbent governments in elections around the world this year. Should Labour be worried? You're listening to Bloomberg UK Politics. Hello, I'm Caroline Hepker.
And I'm Stephen Carroll. So Andrew Bailey's life got a little bit harder this morning. The latest inflation figures for the month of October showed that the headline rate of inflation rose to 2.3%. That's more than we had been expecting. And it also puts the rate of inflation above the Bank of England's target of 2% after 1 month where actually it was below it. Now, the rate of inflation, whereas it matters very much to economists, as we're going to hear, it's something that when you talk to people about it, everyone's more worried about the fact that prices went up by a lot and they haven't come back down. That's where the politics comes into it.
Yeah, absolutely. And so we're going to get into that with our chief UK economist in a moment. This is expected to be a short-term bump in terms of those inflation figures that you're talking about because of the energy price cap in the UK. What Keir Starmer and Rachel Reeves should be far more worried about, perhaps, is what inflation might look like in a year or two or a few months' time. Two big unknowns that I'd point to: what the budget's going to do to inflation in Britain and also what Donald Trump might do, full stop. That's because, of course, when you think about unexpected shocks for the government, well, just look at Russia's war in Ukraine and COVID. They completely derailed the previous Conservative government's economic forecast and they ended up defining their time in office.
Yeah, it's the question, of course, of how much control governments have over these sort of issues as well. Let's get into it. We've got our chief UK economist, Dan Hanson, with us, as well as our UK government reporter, Joe Mays. Dan, to you first. So how seriously should we be concerned about inflation going up and the being above what the Bank of England wants it to be?
The data this morning was a little bit of a surprise, but I think the vast majority, as sort of Caroline alluded to there, was baked in with the energy price cap. So we knew we were going to go back above 2%. The sort of question mark was how far above it. I mean, I think if I look at the outlook for inflation from here, at least over the next 12 months or so, it's hard to see inflation coming back to 2%. I think you're going to be in this sort of 2 to 3% range, probably averaging about 2.5% over that window. And for a lot of the reasons that you've highlighted there. So we've got some things in the budget that were announced that we knew were coming around, for example, private school fees. That will push up on inflation in January. You've then got April when we've got the national minimum or national living wage, increase that will come through. And of course, what we heard from Andrew Bailey there, this huge uncertainty about employer national insurance contributions and how firms will pass that higher cost on. So I think the outlook for inflation from here is one of, if you like, stickiness. And it sort of goes to this argument, the last mile of inflation is difficult. I think the government's made it a little bit harder than it looked prior to the budget. And I think, as I say, I think for us, a sort of 2.5-ish roughly % inflation over the course of the next year probably seems like a reasonable expectation. And obviously that's not what the Bank of England's being asked to do. It's being asked to target 2% inflation. So obviously there are potential ramifications for interest rates as well on the back of that.
Joe, in the US, the recent election, we think, was propelled by the fact that Americans were annoyed about inflation and prices having gone up. Do you think Labour's Treasury team, number 10, are worried about inflation?
It's certainly a concern. I think we're not at the stage where there's kind of electoral pressure in the front of their minds, because they know they're so far out from an election in 5 years' time. But yes, there is an issue here, and they're wary, I think, of stoking inflation through fiscal policy. And as we've said, that national insurance increase could feed through. I think they're very aware of that. I think the more immediate dynamic that is concerning for them is the way in which higher inflation means that interest rate expectations are higher into the future, and that feeds into higher borrowing costs for the government. And that is a problem, because Rachel Reeves has this golden fiscal rule of having day-to-day government spending covered by tax receipts, and the debt interest bill features in that government spending. So if borrowing costs are higher, that means higher debt interest payments. That means that it puts pressure on her main fiscal rule. I mean, already the movement we saw in markets has eroded a lot of her headroom against that main fiscal rule, which means that she might have to come back with further tax increases more quickly than she would have maybe liked to keep meeting her fiscal rule. I think that's the more immediate problem of inflation for this government.
Thinking about that then, Dan, I mean, what's your expectation for what the Bank of England does over the next year? You know, are interest rates definitely going to come down?
I think they will, but I think for the purposes of thinking about what Joe's just described and for the purposes of someone who holds a mortgage, it doesn't really matter what I think, it matters what the market thinks, because it's swap rates in markets that determine mortgage rates. So swap rates, you can think of the average interest rate over a certain period of time, and of course gilt rates or government borrowing costs determine debt interest costs. And at the moment, the market has taken a view that the Bank of England probably isn't going to be able to cut rates that much further. So interest rates, at least according to market expectations, will end next year at about a little bit above maybe 4%. So we're at 4.75 at the moment. So maybe we get three more cuts over the course of the next 12 months or so. We're a little bit more optimistic that they'll be able to cut a little bit further. And I think if you asked the MPC and Andrew Bailey, they would probably be a bit more optimistic than market expectations at the moment about how far they could cut interest rates. But I think one of the questions sort of from a monetary policy perspective and sort of a little bit economics-y, nerdy in the weeds is there is a question about where rates will settle in the medium term, sort of as we look ahead. And we know we're not going back to the sort of COVID era of rock bottom interest rates and after the financial crisis as well. We're probably going somewhere a little bit lower than where we are now, but how much lower, we're not sure. And I think, you know, one of the things we've discussed at length before is how the economy is actually, growth sort of in absolute terms has been weak, but actually relative to what you might have expected it to do, given what's happened with interest rates, has actually not been too bad, the performance of the economy. So I think, you know, I think over the course of the next year, there's going to be a big question, not just for the Bank of England, this is a global question, about where rates will settle. And I think, you know, it wouldn't surprise me. It's not our base case, but it wouldn't surprise me if the sort of bank said, yeah, maybe it has got a 4 handle where rates will ultimately settle and not a 3 handle, which is the sort of consensus amongst economists and probably the prevailing view, at least at the moment, on the MPC, which is the set of policymakers that set interest rates in the UK.
And that would be very different, really, from the decade that we've seen of very
people bragging about their very cheap mortgages that are going to end up at some point having to refinance at a much higher rate.
Yeah, absolutely. And then we sort of alluded to this, the possibility of really quite big shocks and unknowns next year in terms of the trade picture and what may come out of the US in terms of policy and how the UK might be affected. Joe, you know, we had the shock of COVID, the shock of the war in Ukraine. Do you think there's another one that the Labour Party are thinking about in terms of tariffs? And again, there's a debate on whether they could end up being inflationary or deflationary in various different ways.
Yeah, I think the tariffs concern is certainly very much top of the agenda, top of mind for Labour ministers. I mean, with the US, I think mercifully goods trade with the US is not super extensive with the UK, so the kind of tariff exposure threat there is not enormous, but it would still be something that they would be concerned about. And then, yeah, in terms of shocks, I mean, you know, ongoing conflict between Russia and Ukraine, potential escalation further on that could have kind of ripple effects on supply chains, and any escalation there would be problematic. Obviously, the nature of shocks is that they are, you can't predict them, they are a shock. So it's a bit difficult to kind of look out on the radar. But recent experience has shown, COVID, as you mentioned, Ukraine, these things happen. And you have to just kind of position yourself as best you can with things you can control, such as your own fiscal policy, as we talked about with the budget, and then just kind of cross your fingers that you don't have too many exogenous hits that really put you in a difficult inflationary position.
Okay, Joe Mays in Westminster, thanks very much for joining us. Dan, I wanted to ask you about a different issue. We've been speaking to the Resolution Foundation this morning about their research on the labour market, saying 1 million employed people aren't being counted in official data. Here's what their research director, James Smith, told us this morning.
It's still clear that we have got a problem of higher levels of poor health. So more people say that they have disability. We certainly are paying more for our disability benefits, so that's not quite the same thing as the sort of survey measures of ill health. So the types of problems we've been talking about, those are still there, but the overall effect on inactivity through higher employment might be quite a lot smaller. So there could be other things going on pushing down inactivity.
The number of people that fell out of the workforce after COVID has been one of the really big concerns about the UK economy. Dan, is this brilliant news?
Of course it is. If this is true, this is sort of a good news story for the UK labour market. It's one of the things, as James was talking about there on the clip, is that we had this big ramp up in labour demand in the UK following the pandemic, but it was matched by a fall in labour supply, and that's sort of one of the big sources of inflation in the UK. You know, strong demand, weak supply, prices are going to go up, wages are going to go up. You know, it's really when you sort of dissect what the Resolution Foundation have done, which is, you know, excellent. It's that what you have to look at from an inflationary perspective is to ask how much of this is to do with that story we just mentioned, the participation story, the activity story, because that's labour supply. So if there are more people available to work, actually that's going to sort of effectively push down on wages, act as a restraint on wage growth. Or is it that all these people are actually somewhere in employment, maybe self-employed, and we just didn't know it? And actually that's sort of an upward pressure on wage growth. And it's the balance between those two things, at least when you're thinking about interest rates, you're thinking about inflation, that matters. I mean, looking at the Resolution Foundation's report, it looks like they think unemployment is probably quite a bit lower, not a lot lower, but quite a bit lower, maybe below 4 instead of up at 4.3, which is, it's not huge, but it's something. But clearly, if they're right with this, the bigger story may well be that the participation rate is much, much higher in the UK. And obviously, that from a broader economic perspective, in terms of economic outcomes, that is definitely positive news.
In terms of the working age population, it's about 37.5 million people, something like that. So the fact that we were missing maybe somewhere 930,000 people being employed, it's a big number. Just why was that missing? We know the ONS data, the official data, hasn't been great, and it's taken quite a long time to figure out why and what's gone wrong there. Yeah,
it's extraordinary. I mean, the ONS have, and it's not just the ONS who've had this problem, but it's been more acute in the UK. All statistics agencies around the world have had a problem of basically people just don't pick up the phone to answer the questionnaire, because the ONS relies on people like us to pick up the phone and answer questions about our employment status, and that's what informs the labour force survey. Because people aren't doing that anymore, it means that
nobody answers their phone.
No,
I certainly never answer mine.
And because people aren't doing that anymore, it means that the sample size is much smaller. And because you have a much smaller sample size, it's not representative of what's going on in the economy as a whole. And that means you get these big mismeasurement issues, which, you know, if you heard Andrew Bailey yesterday at the Treasury Select Committee, he was talking about the issue, and the Bank of England's been very vocal about how difficult this has made their job. And because it's such an important part of that picture, and of course the broader economic narrative, and going to fiscal policy, there's been a lot of government initiatives to focus on, you know, long-term sickness, getting people back into work, this labour supply issue. And as James, going back to the Resolution Foundation's work, he said there that the survey evidence is that this is an issue, but it might not be quite as big as we thought. So, you know, it's really important for thinking about the policy, not just when you're thinking about interest rates, but also when you're thinking about tax and spending policies and thinking about policies to get people back into work.
Yeah, I mean, Keir Starmer was talking about that only a month ago, you know, trying to tackle worklessness and dealing with job centres and getting people back to work. So it has a big impact on government thinking and government policy, potentially. Dan, thanks so much for being with us on the Politics podcast. Great to have you on. That is Bloomberg's chief UK economist, Dan Hanson.
I mean, it's interesting to think that we have, I suppose, both good and bad news in these numbers today. So inflation a little bit higher than the Bank of England would like it to be. It's something that I'm sure is going to be bubbling in the back of the mind for the government. But as Joe Mays was telling us, nothing they have to worry about too urgently, given that we've got such a long road before the next election. And then this idea that perhaps actually the labour market in the UK might not have as big a problem with people out of the labour force as we might have thought before.
Although that has big implications for productivity. You know, in terms of how we measure the output of those people at work, that's another of the major challenges that the UK economy has.
Yeah, more statistics fun to come. I think that's it from us for today. If you like the programme, don't forget to subscribe, give it 5 stars so other people can find it on Apple Podcasts, Spotify or wherever you listen.
This episode was produced by James Wilcock. Our audio engineer was Sean Guastamakia. I'm Caroline Hepker.
And I'm Stephen Carroll. We'll be back with more tomorrow. This is Bloomberg.
Bloomberg UK Politics. Listen weekdays at noon on DAB Digital Radio in London.